Alright, this is another Wave Trader TV video for YouTube. What I wanted to show here is a trade in the crude oil market that of recently I've been getting more and more involved with, and I'm using basically my same S&P, that's my background, S&P trading methodologies to look for trade setups in this market. And just the other day, this last week, there was a very nice trade setup in the crude oil market that resulted in a very nice day trade. And to set it up for you, what we're looking at here is the action in crude from where I have my cursor up here. Middle of December, a month-long decline into the middle of January. In that entire decline, the largest rally correction was $2.15. You can see right here. And upon coming into this low, the market made a rally retracement of $4.10, which is in trading to win terms, which is the methodology that I follow, the Bryce Gilmore's teachings, is an overbalancing move to this degree of movement, brings the trend into question, and entry on an overbalancing move can be taken at a 50 or 61.8 or a potential 1-to-1 if there is a 1-to-1 available. And I'm going to zoom in here. Any of you that have watched my videos before or have worked with me at my wavetradertv.com site, either seeing some more of my videos or anything like that, you know that my favorite trade as far as how to apply this involves waiting for the overbalancing move and making an entry on a 61.8 retracement. And you can see crude made the overbalancing move last week at the beginning part of the week, and then topped it off on Monday, and came down pretty hard on Monday, but found support right here at the 61.8, which was the entry. And as far as risk goes on this trade, my thought was either to incorporate the 78.6 and maybe these lows, but what I chose alternatively was to just allow for potential gap fill, and that was it. Just trying to minimize the risk. I figured if it was going to work, that was enough to give it in order to find out, or at least give it a chance and see if it would work. So anyway, got involved on a long entry right here, and it opened favorably in the morning on Tuesday. Very nicely. It went a little bit flat, a little chop up and down in the morning, and then finished off powerfully into the close. And it was a market on close exit for me on this trade. But it was a very nice trade, and it's a very good example of the one of my favorite S&P trade entries, and it played out very nicely in the crude oil market this week. I guess the two tips that I would give on this type of a trade are, first of all, this low that produces the overbalancing move, the more important or more significant or the stronger support level that this is, the better odds that the 50 or especially the 61.8 is going to make for a successful trade. Secondly, the more insignificant, the weaker, the more in no man's land that this high that produces the reaction that goes to the 61.8, the higher the odds that the market is then going to make a turn and result in a successful trade. So you want something very important at the low. This is for an example on the long side. You can just flip all of these for a short trade, but you want a very significant low here as support, and an insignificant high here as resistance, and then a move to the 61.8, after the overbalancing move, and that will give you the best odds of having a successful trade on a setup like this. And the only other thing that I'll add in there that is valuable on in S&P trading, and I have to keep monitoring it and form an opinion in the crude market, but the S&P market does fairly well as far as following some internal Elliott wave concepts on these moves. However, I would say that the details that I've already shared are the overriding factors, and looking just right from an Elliott wave perspective is probably secondary. But anyway, I hope that was helpful. If you want to look further into these types of trades, as far as from a methodology standpoint goes, visit my website, wavetradertv.com. I sell Bryce Gilmore's Trading to Win book, which is basically the most important and significant resource I have ever studied in developing my trading strategy and my trading skills. So that said, I will wrap it up and wish you all the best of luck.